Today we will discuss the stock market and how to beat it. Quick answer, you can't. Okay, I'm joking. We will discuss today the few stock market trends that are available, what are they and how you can take advantage of them while being a smart and gainful investor. So please, if you'd like to hear more about the stock market and how to invest in it, keep watching. Hello, I'm G, and you are watching G Life, a channel where I'm trying to teach you all the better ways to better your life while I try to better mine as well. So if you'd like to join me on this journey that's called life, please like, share, and subscribe, and please enjoy the video. Before I get into the main concept of this video, please be advised that I am not your personal advisor when it comes to money. All the opinions expressed in this video are my own opinions, and please take everything with a grain of salt. Before doing any investment into anything, do your own research and make your own decisions. All of this video is for entertainment purposes. Thank you. With the warnings out of the way, let's discuss the main trends of the stock market and begin with the video. So there are two schools of thoughts when it comes to the stock market. The market will go up and the market will go down. Those are the main ideas. Those ideas are coined into terms. The term bull market is considering that the market is going to go up, and the term bear market is considering that the market will go down. That's pretty clear so far, isn't it? So now that we know the main thought processes and the ideas behind the stock market, let's discuss how you can use those for your advantage. When it comes to the stock market, I am extremely bullish myself, and I will explain as to why later on in this video. However, when it comes to the bear market, we have to keep in mind that the stock market fluctuates throughout the daytime up and down quite a bit. And that is where people use the bear market into their advantage. What they do, they so-called short the stock. And what does that mean? Shorting the stock means essentially you buy or borrow a stock at a certain price, saying that, okay, I'm going to pay you like $10 for the stock. You then sell the stock for that $10, and then you wait for the stock price to drop down. If it drops down, for example, for $1, you buy that stock back and then return it to the original owner. While this may work in theory, it can also bring extreme expenses. For example, if you short a stock and the price does not go down but goes up, then you actually have to take care of the losses and pay out of your pocket, hence lose money. As mentioned before, it's not itself a bad idea. However, in reality, you have to know what you're doing, and it's an extremely risky idea. And in my personal opinion, it takes way too much effort for way too little reward. Just look what happened at the situation in the stock market recently. Certain people tried to short a certain stock and ended up getting into a whole lot of trouble. Sounds familiar? Exactly. Okay, so those were the tendencies of the bear market. Now let's talk about the bull market. Now, as I premised before, I myself am extremely bullish on the stock market. And the reason why is that no matter how the stock fluctuates up and down throughout the day or through the month, the stock market itself has a tendency to go up. And before someone starts to interrupt me and say, no, that 1 year the stock market went down. Yes, I understand that there are specific stocks that do not perform well in the market as the market should. However, most of the time, the stocks go up. This shows a pattern that if you choose your stocks wisely and correctly, you will come out on top because the market is going to grow and you're going to come out a wealthier investor. Now, what does it mean to choose the right stocks? That is where the ETFs or index funds come in. What do you mean? What do I mean is, imagine you're buying a stock of the top 500 companies, each and every one of them. Just imagine the expense. You wouldn't have enough money, right? Well, the index fund allows you to buy a piece of those top 500 companies. That's, for example, the S&P 500. The index fund allows you to buy one little piece of every single company in it. By owning that, you own a piece of all of those companies that are located in that index fund. And what that means is that come dividend time, you're getting the dividends from all of those companies in one small, nicely package of the index fund. Now, index funds all come in various shape and sizes. The S&P 500 is the most popular one. It's the top 500 ranking companies, and its price itself can reach from, I think the low was 300, and right now it went up to 360 not so long ago. So keep in mind that each and every index fund has its own terms. Please look into the price of the index fund, also the dividend yield, because some of them end up being free, some of them cost you some to invest every single year. So with each index fund, please look it up, and that is the one way that you can come on top of the stock market. Okay, so that is index funds. But that doesn't explain a lot of things. If the ETFs or index funds were the only way to come on top of the stock market, everyone would do it, right? Well, that is where you're right. There's more than that. The second way to beat the stock market or to come out on top of the stock market is to learn to not follow the crowd. What I mean about that? When the stock reaches a certain price, everyone starts to sell because they're afraid that the stock is going down. Usually that's followed when the stock drops 10% or more. And what happens then, essentially, you lose out on the opportunity. Because when everyone's selling because they're scrambling, they're like, oh, something's happening. No, I must sell. That is when you have to buy. Let me explain why. Because, as I said before, the stock market fluctuates up and down, up and down. That's how it actually works. And when the price drops down, that's where you're at a low. That's where you have to buy because the price of it is going to go up anyways. You understand what I mean? So that is what I mean about learn to not follow the crowd. Follow your own mind and think. Before that, warning. Please, before purchasing any stock at all, do your own research. If the company is actually going bankrupt, they will drop their stock prices. And a huge chance if the company goes bankrupt, they probably won't go back up. So please, before buying any type of stock, do your research and read about the company and what's going on and what is their long-term plan. Okay, so what are the other ways of investing into stock? And how can you beat the stock market in other ways? Well, what if I told you that you could invest in real estate while investing in the stock market? Wait, what? real estate, stock market, and aren't those different types of investments? Yes, but remember how I talked about ETFs? Well, this is where I'm going to talk about the REITs. And what is a REIT? Well, it's the same as an ETF, it's an index fund. However, this index fund only invests in real estate and only owns real estate. What that means? That means that by investing in a REIT, you're investing into real estate while investing in the stock market and not having to do maintenance on any of the REIT's purchases. But the profits, meaning the rent and so forth, comes back to you as a form of dividend. I know this is a lot to take in. However, the REIT investment need to be noted. You have to read into, as same as investing into anything, you have to read into the REITs, what are they investing in? Because some real estates, for example, commercial real estate, currently are not doing so well due to the happenings of 2020. So before you invest in the REIT, read into, are they buying commercial properties or are they buying actual real estate properties when it comes to condo complex and things like that. And the last but certainly not least approach is buying individual stocks. Now, this approach carries quite a bit of risk, but it can bring profit as well. There are people who have come up with formulas and calculating what stocks should do well. And that in stocks means that the stock itself is undervalued, however brings in a high dividend. At least such is the idea behind the magic formula that was created by Joel Greenblatt. While I can't say for myself if the magic formula works or not, I know that I will be trying it in the future months and I will keeping you guys updated on how it works. These are just a few market trends and ways that you can beat the market and come up on top being a wealthier and a better investor. If I have missed any of the ways that you know, please do leave a comment down below. Let's share information, let's learn from each other. If you enjoyed the video, please do like, share, and subscribe. This was G, and you were watching G Live, and let's do this.